Hello, everybody. So today I want to talk about two Bitcoin proxies that have nearly free underlying businesses if you take into account the fact that they own so much Bitcoin. And these two businesses are Mara, now named Mara. It's a Bitcoin miner. It's the oldest Bitcoin miner. It's a legacy Bitcoin miner. And Semler Scientific, a maker of a medical device called QuantaFlow, who went on the Bitcoin standard, i.e. they followed the playbook of Saylor after Medicare said, we stop reimbursing your product. And, oftentimes what happens is companies die when that happens. And Semler was like, nope, I'm taking my cash. I'm putting it into Bitcoin because I want to be saved by Bitcoin. And if you look, these companies are made up of a lot of Bitcoin. Mara is made up of 99.17% Bitcoin, and Semler is made up of 98.88% Bitcoin. And both of these companies have stated that they will be buying more Bitcoin, either via their cash flows or via their debts. And so this cannot be understood. I do not understand this. This is a complete mess. We are seeing some bear market behavior in the public equities of these Bitcoin companies. For sure. That's the way I look at it. And if I look at Mara is a 4.25 billion market cap. They have 4.21 billion of Bitcoin. So that means that this stock would be 40 million only. Mara would be worth 40 million only. That's not even the value of one of their sites. That's entirely ridiculous. They have 7 huge sites across the United States. That's not even the value of one. And Semler, smaller company than Mara, okay? But Semler, look, they have 290 million of Bitcoin and 290 million of market cap and 283 million of Bitcoin. So 290 million of market cap and you remove 283 million of Bitcoin, what do you get? You get a business that is only worth 7 million? 7 million for QuantaFlow? Who are we kidding? This is a product that still has revenue of more than 50 million a year and it's 7 million? I mean, what kind of percentage is that? And by the way, I'm not going to cover these today, but Hate and Riot probably deserve some separate analysis because 1.22 and 1.35 for this is also very much dirt cheap. And Hut and Riot have newer miners than Mara. Mara is the oldest miner. So let's just go ahead and talk a little bit about these companies. First of all, note that I consider hoping the market at least makes 10% worth of sense. Hoping that, assuming the market still has a teeny tiny bit of sense, I consider the floor to be a price to NAV of 1, right? Or very close to that, like a 0.98, sure, on a really bad day. But I consider 1 price to NAV to be the floor. Why? Why is that? Because Bitcoin is not goodwill. Bitcoin is not some imaginary value an accountant has placed on a machine. Bitcoin can be sold, right? Bitcoin is not an imaginary value some person has placed on a brand or some BS like that. No, Bitcoin is the most disposable, sellable assets that there is. There is no denying. This is an easily sellable asset. This is not like regular assets on a balance sheet. It's as good as cash, if not better than cash, if you ask me. Right? But it's at the very least as good as cash. Why do I say it's bigger than cash? Why do I say it's better than cash? Because you remember, of course, the Silicon Valley Bank debacle, and for 3 days, Roku didn't know whether they were going to get back their $450 million, right? For 3 days, $450 million of cash was at risk. That's the fiat system. That's why I argue Bitcoin on the balance sheet is actually slightly safer than cash, if not much safer than cash in the event of a real crisis. So anyways, let's keep that in mind. Just because a company has 400 million of cash on the balance sheet doesn't mean that cash is there in the event of a big turmoil like we had in 2023. You remember that the market was scared for 3 days that some of these big companies were going to lose the funds. Politicians were calling for these big companies to lose the funds because they were banking with Silicon Valley Bank. So let's remember that too. Cash is as safe as the banks that you place the cash in, and you better not be banking with a small bank. You got to be banking with a big bank. Done with this tangent. I love Bitcoin very much for that reason. Anyways, so I consider price to NAV of 1 to be essentially the floor. So now let's talk about the businesses that you can get for a BTC adjusted price of, let's start with Semler, 7 million. For a Bitcoin adjusted price of 7 million, and by Bitcoin adjusted, I mean I remove the value of Bitcoin from the market cap. I assume the Bitcoin is sold, and now we are left with the cash and with whatever the difference is between the Bitcoin's value and the market cap. And for Semler, as I speak, it's 7 million. And so think about what you get for 7 million. And that's essentially a synthetic Bitcoin miner, right? You're running a business and you're getting money and you're putting money into Bitcoin. So you're getting QuantaFlow. QuantaFlow is a medical device. It's to detect peripheral artery disease about I've discussed this. About 1 in 5 people with atherosclerosis may have it or be at risk of have it. And so they developed this device that, you typically do this with your physical, with your doctor. They place it on your finger. It lasts 3 minutes, and 3 minutes later, you know whether you have PAD or not. And this device was actually very successful. And you can see this is the revenue growth until Medicare decided to stop paying for it. This device was actually very successful. And of course, whenever something is a little too successful, Medicare just stops covering it or stops paying for it. And the reason why Medicare stopped paying for it is because this PAD replaces a test from the 1940s. And Medicare said, well, the doctors should do the test from the 1940s. In practice, and that test is called the ABI test, the Archeal Bronchial Index, whatever. Anyway, the ABI test. And Medicare was like, well, wait, no, the doctor should perform this test. Well, yeah, but the test takes 15 to 20 minutes and is typically performed by a medical assistant, which may or may not know what they are doing, but human errors are never a thing, according to Medicare. This has much better accuracy. It's so obvious, right? It's obvious that it has a much better accuracy than a human doing the test from the 1950s or the 1940s. But anyways, what happened is Medicare said, oh, we stopped paying for this. So now QuantaFlow is pretty much a product that is still used by private clinics, like the high-end clinics, the clinics where the cost is no object. They still use QuantaFlow, but otherwise it's a very hard sell for any clinic that relies on Medicare reimbursement. And as a result of that, of course, the revenue is declining, but it's nowhere near a catastrophe. The revenue is declining, 10 to 15% a year. It's not that big of a catastrophe. Remember, this is a $7 million business, and it's not like you're going to have huge divestments to do when this business is gone, right? It's like it's a medical device. So anyways, they're trying to turn that around. That's probably a secondary priority after acquiring Bitcoin, but they're trying to develop that around. And you know how they do it with Medicare. You got to publish new studies that prove that your product is worthy, and so they work on these studies and with the hope of being reimbursed again. But anyways, QuantaFlow is still not going away because I think it's still going to be a thing with private clinics. Probably just a smaller business than what it was, and at some point the decline, I think, will stop. This stock also had an overhang because the DOJ sued a bunch of companies that were in the former round of reimbursements with Medicare. More than a dozen of companies were sued for unfair marketing practice. Of course, the DOJ wants their money, so they were suing for unfair marketing practice. QuantaFlow was just one of the companies that was sued. There were many companies sued. They settled for just under 30 million. So QuantaFlow settled for just under 30 million, which means the overhang is gone. So now we have a business with no DOJ overhang anymore, okay? With a revenue, with a product that was a blockbuster product and whose revenue stopped growing because Medicare say we stopped paying for it. But that is still revenue of 56 million trailing 12 months. And EBITDA, right, my proxy for cash flow, I mean, most reasonable people's proxy for cash flow at this point, if you're critical about finance, EBITDA, because depreciation and amortization is a fake expense, it's not real. Anyways, EBITDA is 22 million, right? EBITDA was 22 million. So again, even with a declining business, do you not think that this is at least going to cash flow 7 million over the next 12 months? Like, even with a 15% a year declining revenue growth rate, what are they going to do in EBITDA? Is it going to be 18 million? It could actually be more, because what is it that happens when revenue declines for a company like Semler? What do you think happens? Layoffs. You stop all investments. You go lean. You go so lean. No more sales teams, no more nothing, right? This is what happened with the master settlement of the tobacco industry. If you follow the tobacco industry, what happened after the master settlement? You had big tobacco. There were 120, 130,000 people. In a matter of 18 months, there were 6,000 people, because they fired everybody, because tobacco companies were not allowed to advertise anymore, not allowed to have sales teams. So this is very similar to that. EBITDA might actually go up depending on the cost-cutting practices that they implement because of this. So obviously, not a stock I would touch without Bitcoin, but with Bitcoin, I love Quantaflow. With Bitcoin, I'm all about Quantaflow with Bitcoin. I want to invest in this medical device because really I'm getting 99% Bitcoin, 1% medical device when I buy Semler. And I actually have put a buy order to buy it tomorrow morning. Hopefully it goes through, but we live in the 18th century and stocks markets are closed at 9. Anyways, they're closed at night. So anyways, it's ridiculous. Okay, quick note on Mara. So now Mara is the other stock that I told you about. So Mara, remember the price of Mara is 40 million. So the question is Mara at least, and this is laughable, right? Because the market is nuts. Is Mara at least worth 40 million? Seriously, is it at least worth 40 million, right? Note that for the full year of 2024, the electricity cost, which is more than electricity, by the way, it's transportation, all sorts of stuff, but they call it the direct energy cost, right? Was $28,000 for mining one Bitcoin, right? Are we able to mine one Bitcoin for only $28,000 of electricity? Us home miners, if we wanted to do that, right? No, you can't. A big company like Mara can. They have cheap electric cost. Mara is actually the company that has the cheapest electric cost. And why is that? That is because their miners are the least efficient, oldest miners in the business. And because they're the oldest. And so they've taken a lot of the depreciation of the miners already, and they're just expanding the life on the miners. And they're only mining when there's, say, excess energy, when electricity is very cheap. Their goal has been to keep the miner fleet and to really, really optimize for cheap electricity. And what do you do that? You go buy stranded energy. So they have a big program with gas flare-ups, for example. They have a big program with malinvestment. So they bought this wind farm in the middle of nowhere in Texas, and the best way I describe it, it's malinvestment, right? Somebody invested in this wind farm, and there's no connection to the wind farm. So really the best use case for the electricity is, mining Bitcoin, because somebody was dumb enough to invest in the middle of nowhere and make electricity where it's not going to be used. So anyways, I still think they have a lot of potential to find very, very cheap electricity. I remember the CEO talking about some of their sites being the equivalent of 1 cent per kilowatt hour. 1 cent per kilowatt hour. So keep that in mind, right? Those miners might still be useful for a little while if you only pay 1 cent per kilowatt hour. Anyways, and this is what I'll conclude with, Will. I don't think any miner would be dumb enough to mine for more than direct energy cost, right? So you wouldn't spend $95,000 of electricity per Bitcoin mined if Bitcoin was at 88,000. And of course, that's what Mara does. Mara stops mining whenever the cost is too high, right? They have their stats, and whenever the cost of electricity is too high compared to the difficulty, the miners just shut off. They just sit there, and they wait for electricity to be cheap again. And then they mine a little bit, and they may mine only a few hours a day. But I don't think any miner would be dumb enough to mine, you're not going to spend you're not going to spend 100 grand in electricity when the price of Bitcoin is 88, right? So anyways, to me, 40 million for still the biggest, by the way, but CleanSpark is going to go ahead and beat them. But there's going to be a handful of companies with about 50 exahash. So they're like a top 3 Bitcoin miners, and they're trading for 40 million. That's the Bitcoin adjusted price, and it makes absolutely no sense to me. And like I said, if you look at the site, the size of some of these sites, the 40 million may very well be the price of just one site, because some of these mining sites are absolutely enormous and extremely expensive. And you can do the calculation, right? Average price paid is $400,000 per megawatt, and they have 1,200 megawatts. So I'll let you do the calculation to figure out how cheap really this is, because these are industrial sites that still have value. They have real estate value in the form of accessing that crazy electricity, but they still have value. 2 data centers, 2 Bitcoin miners, and also to heavy industry, like, making aluminum, right? If you're going to make aluminum, you need there's a lot of industries where you need a lot of electric access to power, and access to power has value. So the market is totally dumb, in my view. Like, there's no other way to say it. The market is starting to get MicroStrategy, and I am so pleased with the performance of MicroStrategy. The market is now getting MicroStrategy. We have yet to see a market that starts to understand other proxies, but I think in time they will. So anyways, this was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.